Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your weekend agriculture update for this Friday, and we are at the 24th of February, 2017. All right, my friends, interesting day. As you can see on the daily chart, you were down on the wheat and the corn, but we're going to talk weekly in today's video. And the beans, a little bit of a bounce. Sugar market, again, breaking down. Cotton, a bit stable today, and there's not much more really going on. It's just sort of sideways. And the reason for that is that the monthly soybean chart is in what I call a triangle pattern. You can see the triangle that's forming. And all I'm doing is connecting the down slopes and the up slopes here. As you work into this apex, the market gets ready to break out one way or the other. Now, for those of you that take our research and get our daily charts, our charts of the day as they were with our price counts, we today issued one in soybeans that had a fairly large breakout to the downside if prices meet the first count. But that's a different story. Here we're going to review this and talk about it. And by the way, if you want the research, I have a special offer for you today as well. When you look at the weekly soybeans, you can see how the market has gone here from right through here down. So what we've got is a down thrust going in the market. It's pretty clear. Market closed today around 1013.5. The recent high's been the 1080 level, and this is just how the chart looks on a weekly basis. The key is, do you take this out? If you start breaking through these supports, watch out. The 950 level comes in, then the 9, then 850. So you've got to be looking at this market in layers if it continues to break down. When you come to the swing line study by itself, lower highs, lower lows. That part of the weekly chart is bearish. When we look at where the market is on the weekly 18-day average of closes, you're under it. So now you have a market that's got downside bias and the trend is down. The risk in being short is to not get back over 1063.5. If you do, you break that pattern. If prices were to continue down, where might prices find support? Well, obviously there's a lot of areas, but as I'm looking at it, the 100-day average certainly comes into my eye at 968.5, which is close to that previous 950 support level, and the lower Bollinger Band is right by it. So I think there's credence that if, and that's the word, I can't answer that, if prices continue down, I'm looking for them to get in that level, and the slow stochastics have at least got momentum pointing down, and if you believe in the theory that slow stochastics lead price, in other words, momentum leads price, you've still got that part going for the market too. In the soybean meal, it's a different world. You've got problems in this market. First off, you got a bullish crossover where the 18-day average is over the 100. That's friendly. Now we have a pattern where you got lower highs and lower lows. That's bearish. The two nullify each other. I look at momentum, it's flat to trying to turn down. So hard to say. This is certainly not the same bear pattern that we have in the soybean. The soybean oil's in a clear-cut bearish pattern that is oversold, but slow stochastics on weekly charts, you have to use them very different than you do on the other types of charts, the daily or intraday charts. I completely use them different. So I don't put the credence on overbought, oversold, and betting anywhere near on a weekly chart. I look at it, and that's why you're seeing it, but that's about it. I'm looking at a market with lower highs, lower lows that is now running the lower Bollinger Band. Next stopping spot, if it wants to drop further, is 31.85, about 50 lower. That is the 100-week moving average of closes. We then come to the corn chart, and the daily chart has turned bearish, which is interesting. The weekly chart has not. The weekly chart is saying in an interesting way, okay, you got a few weeks over the 100-week moving average. You'd normally fail on that first challenge. You're pulling back. Will support come in at 355 3/4, which is the 18-week average, and you lost this week the embedded part of the corn weekly chart. So momentum has come out of the market to the upside. On the wheat chart, The daily chart is also turned down into a bear trend, but the weekly is not. You have a market with higher lows, higher highs. It stopped literally at that first challenge again of the 100-week chart. You can see it did it back here as well. And that's what I try to teach in my morning videos, to really point out so that you don't miss any of these steps. I can miss them, of course, but I try not to. Support back at 415, and that wouldn't be a bad break. Plus, on this, you lost your embedded reading as well, so down. Cocoa market. If you look at the daily chart, the market's fighting at the 18-day moving average of closes. If you go to the weekly chart on this close, you lost the embedded reading. Now, what's the rule? You can gain that back the week after you lose it. After that, you can't. It's got to go through the whole process again, which would take the better part of a month. So where are you? Well, you're still in the bear camp in the swing line. You haven't taken out a previous high. You didn't quite make it to the lower Bollinger Band, and momentum has been lost to the downside, which you're now seeing with 2 weeks well off the lows that you recently made. The sugar chart has thrown out fresh bearish signals. Lower highs, outside week down, by the way, and if you take a look, you're under the 18-week moving average of closes. Momentum is flat. That's the negative. So I think the pros will be fairly aggressive on the short side at the 2018 level, and they won't want to see it over 2100 in the next 2-week period. Why 2 weeks? Well, the rules on an outside day up or down are the same. For 2 time frames, I don't want to see going forward that if you have an outside day up, you don't take out that low, or an outside day down, you don't take out that week's high over a 2-week period. I've gone back, and it's one of the rules that I pay attention to, but there's many rules. And they're taught in my charting course, by the way. In the coffee market, you're having great trouble staying up and over that 18-week average of closes. So you've got a market that's had the swing line up, but it can't seem to get itself to stay over that 18-week average. You've got nothing here. You've got a market that's sort of churning like this, and you see that in the price momentum, just flat. Cotton chart, interesting. You've got the momentum, first off, overbought. Number 2, that's the momentum. You've got the swing line with lower highs and lower lows, yet you're over the 18-day average. So the bias is up, the swing line trend is down. I have a big nothing on that chart as well. I haven't seen the cattle on feed report yet, and we will. The market is on the longer term scale, higher lows, higher highs, missed hitting the upper Bollinger Band, overbought condition, but I read overbought on weekly charts as the market still got price saying that momentum is leading price to the upside. In the hog market, you've gotten a pullback. The daily charts look terrible. They look like a major top has been made, but on the weekly chart, you're not in that camp. You've got a market that's got higher lows, higher highs. It spent the better part of 3 weeks, 4 weeks now, trying to stay over, and it did it today. It's staying over the 100-week moving average of closes, and momentum is trying to be lost to the upside. That's the way I describe the chart. It is still on the weekly chart in a bullish configuration unless you take out 64.32.5, and if the red line drops and closes under 80. So I put that all together, and that's one of the ways that I start analyzing it. And in the mornings, what I do is I get a cup of coffee, and that's what you're seeing right here, and I write. I write early in the morning so that by 11:30 in the morning, my people see my written updates. But at 8:30, I start recording a video. Now, what I did today is, if you're on our mailing list, I sent you out a copy of this morning's subscriber video, this morning's actual update that my clients got, in an email with a discount of $20 off a 1-month, which is 30-day subscription. Doesn't matter the day of the month you begin. Why? I want to prove the value of what I'm doing. At the same time, I want you to have a little skin in the game to see if this makes sense for you. When you give things away just free all the time, you know what? That's what they are. They're worth free. And that bothers me. It probably bothers you. You pay for something, you get these emails. Will you get a good idea? If I don't do it, you don't want to continue. If you do get it, you're going to say, you know, that's worth it. And that's how it works. So a normal subscription is $60. It's going to be $40. If you have a trading account with us, a normal subscription is $40. You get $20. If you're a current subscriber, the offer is void. It has no bearing on you. You've already got your discounts all the way through it. And I will offer you something down the road anyways. But in looking at all this, why not take advantage of it? What do you have to lose? It's roughly $1.50 a day or so. It's 22 business days a month. Take a look and see if you come up with anything good. I'm Ira Epstein. The code is IRA20. That's capital IRA20. So when you click on any of this and you go to our website and you see Ira's research, just put that in. You're going to get the discount. I'll make sure you get it if you screw it up in any way. You have a great day. I'm Ira Epstein.